Welcome, folks, to the electrifying world of NIO. This isn't just another car company, it's Shanghai's electric vehicle titan, a dream machine on wheels. Born in the innovative fires of 2014 and hitting the New York Stock Exchange with a bang in 2018, NIO is redefining what it means to drive. They're not just assembling metal and batteries, they are meticulously crafting a premium lifestyle, an experience that screams future. Forget those dusty old auto stocks your grandpa hoards. We're talking about vehicles with sleek, aerodynamic designs that turn heads, cutting-edge technology that learns your habits, and a bold vision for an all-electric tomorrow that could supercharge your portfolio. But buckle up, because this stock journey has been more volatile than a caffeine-fueled squirrel, a real roller coaster of highs and lows. It's a name that ignites passionate debate, sparks incredible excitement, and causes a whole lot of intense head-scratching on Wall Street. Are you ready to plug in and explore this phenomenon? Booyah! Now let's talk about the stock story, because let me tell you, it's a page-turner filled with ups, downs, and dizzying all-arounds. As of our latest check-in, late April 2025, NIO shares are hovering around the $4.13 mark. That single price point tells a dramatic tale, doesn't it? The company boasts a market capitalization of over $8.62 billion. A respectable figure, certainly, but listen closely to this next part. The stock has taken a gut-wrenching hit, plummeting 22.51% year over year. Ouch! That stings! And if we dial back the clock to December 2024, it was trading near $4.55, having already surrendered nearly half its value during that challenging year. This stock, my friends, is not for the faint of heart or the weak-kneed investor. It's a true test of your conviction, your patience, and perhaps even your sanity. But within this whirlwind of volatility, could there be a hidden gem, a golden opportunity? That, my friends, is the multi-billion-dollar question we're here to dissect. NIO isn't waltzing alone in this high-stakes electric vehicle rodeo. Oh no, not by a long shot. They are squaring off against industry behemoths, true titans of the automotive world. Think about Tesla, the undisputed trailblazer. Then there's BYD, the ever-dominant force right in NIO's home turf of China. And let's not forget a whole formidable army of other ambitious Chinese EV players, all hungry for a piece of the pie. Globally, NIO managed to capture about 1.6% of the electric vehicle market share as of 2023. Zooming into China, the planet's largest and most competitive EV playground, they're holding on to a 2.1% share, which currently places them 9th in the pecking order. This isn't just competition, it's a battlefield, a relentless war for market dominance. But NIO is strategically carving out its unique niche, focusing intensely on delivering that premium user experience and leveraging its magical battery-swapping technology. They are the David, slinging some seriously impressive technological stones at the Goliaths of the industry. So, with all this market turbulence and intense competitive pressure, why are we even dedicating our precious time to talking about NIO? Because, my friends, there's an undeniable allure, a tantalizing promise of something truly big on the horizon. They're not just in the business of selling cars, they are evangelizing a comprehensive vision. This vision includes their innovative battery-as-a-service (BaaS) model, fostering a strong sense of community among owners, and creating a seamless, interconnected technology ecosystem that extends beyond the vehicle itself. Remember, this is a company that had the foresight to secure autonomous driving permits in California way back in 2014. That's thinking light years ahead. This entire saga is about relentless innovation, bold disruption, and the colossal potential for explosive growth if, and it's a big if, they can successfully navigate the treacherous and winding roads that lie ahead. It's a compelling story of unbridled ambition in the face of considerable adversity. When you're sizing up an electric vehicle company, delivery numbers are absolute king. They're the pulse, the heartbeat, telling you if the company is actually getting its magnificent machines into the hands of eager customers, if the rubber is truly meeting the road, literally. In the third quarter of fiscal year 2024, NIO proudly pushed out an impressive 61,855 vehicles. That's a healthy 7% jump compared to the previous quarter. That's the kind of momentum we love to see. For the entire fiscal year 2024, they successfully delivered a grand total of 221,970 vehicles to customers. And get this, cumulative deliveries by the close of 2024 reached a cool 671,564 cars on roads worldwide. These are not rookie numbers, folks. These figures demonstrate serious production capability and a steadily growing consumer acceptance of the NIO brand, even if their own guidance was sometimes a tad on the optimistic side. Every single car delivered is a hard-fought victory. Now, let's shift gears and talk about the moolah, the revenue. In Q3 of fiscal year 2024, NIO's total revenue clocked in at RMB 18.7 billion. But here's the critical plot twist. That figure was actually down 2.1% when compared year over year. You ask why? The culprit was the dreaded average selling price, ASP, taking a dip, primarily due to a strategic change in their product mix, favoring models that might have a lower price point but higher volume. Interestingly, car sales themselves, the core of their business, amounted to RMB 16.7 billion, which was actually up by a respectable 6.5% year over year, largely driven by the introduction and ramp-up of the Onvo L60 model. This financial dynamic clearly shows that while they're successfully selling more units of certain models, the overall price fetched per car can fluctuate significantly, inevitably impacting that crucial top-line revenue figure. It's a delicate, high-stakes balancing act between achieving volume and maintaining premium value. Margins. The holy grail for any ambitious growth company. The metric that separates the contenders from the pretenders on the path to profitability. And right here in this critical area, NIO is showing some serious fighting spirit, some real grit. The vehicle margin in Q3 of fiscal year 2024 impressively climbed to 13.1%. That's a significant step up from 12.2% in the second quarter, and a leap from 11% in the first quarter. That, my friends, is precisely the upward trajectory we want to witness. The overall gross margin also saw a welcome uptick, reaching 10.75%. They're not stopping there. NIO has set ambitious targets, a 15% vehicle margin in the fourth quarter of fiscal year 2024, and a whopping 20% by fiscal year 2025. Ambitious? You bet your bottom dollar it is. But achieving these targets is absolutely crucial if they want to silence the persistent doubters and definitively prove that their innovative business model can work and thrive in the long term. And don't you dare sleep on NIO's other sales segment, people. This often overlooked part of their business could be their secret weapon, the ace up their sleeve. This category includes their revolutionary Battery-as-a-Service (BaaS) program, a subscription model for batteries, and that incredible, ever-expanding power swap station network. This segment didn't just grow, it exploded, surging by a massive 19.2% year over year in the third quarter, bringing in a substantial RMB 2 billion. This isn't just pocket change, folks. It represents a potentially lucrative recurring revenue stream. More importantly, it fosters a sticky ecosystem that keeps customers loyal, locked in, and loving the convenience. Imagine this. Over 58 million battery swaps were successfully completed during Q3 of fiscal year 2024 alone. That's not just a cool feature, it's a formidable competitive moat. This strategic diversification could very well be a game changer for NIO's future. Booyah! If there's one single standout innovation that makes NIO shine brightly and differentiate itself from the increasingly crowded electric vehicle pack, it's their groundbreaking battery swapping technology. Forget those long, tedious waits at charging stations, anxiously watching the percentage creep up. NIO owners can breeze into a power swap station and have a depleted battery automatically replaced with a fully charged one in mere minutes. It's like a pit stop for your EV. As of the third quarter of fiscal year 2024, they had an impressive network of 2,737 of these power swap stations humming along, efficiently serving their customers. This isn't just about convenience, though that's a huge plus. It's a stroke of genius. It directly addresses major consumer pain points like range anxiety, concerns about long-term battery degradation, and even offers a flexible subscription model through their BaaS program. This is tangible innovation that solves real-world problems, and it's a massive differentiator in this fiercely competitive market. They are not just selling cars, they are building an entire energy network. But hold on, NIO isn't some one-trick pony relying solely on battery swaps. Their innovation pipeline is absolutely bubbling with exciting developments. They've possessed autonomous driving permits in California since way back in 2014, a clear testament to their long-term vision and unwavering commitment to developing sophisticated self-driving technology. They've even taken the bold step of launching their own branded smartphones in China, aiming to create a seamless, integrated digital experience that bridges the gap between your car and your broader digital life. And let's not forget their charming and intelligent in-vehicle AI assistant Nomi, which makes the driving experience more interactive, intuitive, and deeply personalized. You have to understand, NIO positions itself as a technology company that just happens to make incredibly advanced cars, and that philosophical approach, that DNA, is an exceptionally powerful combination for shaping the future of mobility. Get ready for the reinforcements, because NIO is strategically expanding its brand portfolio to capture a wider array of market segments and customer preferences. The Onvo brand, spearheaded by its compelling L60 model, is absolutely crucial to this strategy. Some analysts, like the sharp minds at Deutsche Bank, are incredibly bullish, projecting that NIO could sell as many as 219,000 Onvo units in 2025 alone. That's huge! Production for the Onvo line is expected to ramp up significantly, targeting an output of 20,000 units per month by March 2025. Then, prepare for the arrival of the ET9 executive flagship sedan, a true statement of luxury, performance, and cutting-edge technology. Also slated for a highly anticipated launch in March 2025. And for the mass-market compact segment, the Firefly sub-brand is warming up in the wings, designed to appeal to budget-conscious consumers with lower price points. Diversification, my friends, is the name of the game for survival and growth in this dynamic industry. So, what does Wall Street's crystal ball reveal about NIO's future? Well, folks, the predictions are a bit cloudy, a fascinating mix of unbridled optimism and cautious restraint. The consensus price target among analysts is currently hovering around $7.23 per share. Now, if that target is hit, it suggests a potential upside of a whopping 75% from current trading levels. Ka-ching! That's the sound of opportunity. Deutsche Bank is enthusiastically waving the bull flag with a very optimistic $9 target, largely banking on massive sales figures from the new Onvo brand. Zacks Investment Research also sees a rebound, predicting the stock could climb to $5.78. But then, on the other side of the street, you have giants like Goldman Sachs expressing a more bearish sentiment with a $3.90 target, citing concerns over past delivery misses and the relentless competitive pressures. It's a decidedly mixed bag of opinions, which means one thing above all, you absolutely gotta do your own homework before making any moves. Alright, let's get brutally honest here. Pouring your hard-earned cash into NIO stock isn't like a leisurely stroll in a well-manicured park. It's far more akin to carefully navigating a treacherous minefield where every step requires caution. The competition in the EV space is beyond fierce. It's a shark tank. You've got the omnipresent Tesla, the dominant force of BYD breathing right down NIO's neck in its home market, and a veritable legion of other ambitious and aggressive electric vehicle players emerging from China, all vying for consumer attention and market share. Price cuts have become rampant across the industry, a common tactic to woo buyers, but this practice inevitably squeezes those precious average selling prices, ASPs, and consequently the all-important profit margins. This is especially concerning with the new, more affordable Onvo L60, which, while boosting volume, could potentially dilute the overall margin mix. Furthermore, NIO's revenue growth has slowed significantly from its earlier hypergrowth days, and the stock itself is facing considerable technical pressure, currently trading below key moving averages. These are serious, undeniable headwinds, people. Don't you dare ignore them. Then, layered on top of these company-specific issues are the broader big-picture macroeconomic and geopolitical worries. Those simmering China-US tensions? You better believe they could send shockwaves through this stock, creating volatility and uncertainty. The upcoming US presidential election could also introduce new tariffs or import policies, adding yet another complex layer of unpredictability for Chinese companies like NIO. Financially, while NIO currently possesses about $6 billion in short-term liquidity, which, based on past operational burn rates, is estimated to be sufficient for less than 2 years of operating expenses. The company is not widely expected to achieve break-even profitability until fiscal year 2027. That's a long time to wait for consistent profits, firmly placing this stock in the speculative investment category. On a positive note, the debt-to-equity ratio has shown improvement, which is good financial housekeeping, but the path to sustained, reliable profitability is clearly still under construction and fraught with challenges. So, with all these risks and uncertainties clearly laid out, why on earth would anyone even consider taking this high-wire act of an investment? Because the potential upside, if NIO executes its ambitious plans flawlessly, could be absolutely monumental. Their truly innovative battery-swapping technology isn't just a gimmick, it's a genuine game-changer, creating a uniquely sticky and convenient ecosystem for its users. The strategic expansion into new brands like Onvo, for the family market, and Firefly, for the compact budget-conscious segment, could unlock massive new customer bases and significantly boost sales volumes. Furthermore, supportive Chinese government policies including EV subsidies and substantial funding for charging and swapping infrastructure provide a favorable operating backdrop. And let's be perfectly frank, the stock is currently considered undervalued by some market observers, when compared to its peers, especially when factoring in the significant scale and potential of its battery-as-a-service (BaaS) business. In fact, Seeking Alpha even rated it a speculative buy for 2025. Listen up, because this is my final roar on NIO. This stock is absolutely not for the timid investor who's looking for a safe, reliable dividend payer to tuck away in their retirement account. No way. This is a quintessential high-risk, high-reward proposition. It's a bold bet on a compelling vision, on continuous innovation, and critically, on the management team's ability to expertly navigate an incredibly tough and unforgiving market landscape. If they can successfully scale the Onvo brand, maintain strict margin discipline amidst price wars, continue to push the envelope with their battery technology and service offerings, and effectively expand their geographic footprint, then this stock could transform into an absolute rocket, soaring to incredible heights. However, if they stumble, if execution falters, the downside risk is undeniably significant. For younger investors with a strong stomach for volatility, a genuine belief in the EV revolution, and a long-term investment horizon, a small, carefully considered speculative position in NIO could be a ticket to a potentially explosive and rewarding ride. As always, do your own thorough homework, watch the company's execution like a hawk, and be prepared for absolutely anything. Booyah!